Thank you. Thank you for having me again. Welcome, everybody. All right, let's get to it. We got a short amount of time. Today, I'm going to be talking about multiple time frames, the art of it, a little bit about myself. I've been doing this for a few decades. I started in the late 1980s. You can see on the right side of the screen there a few books that I've done over the years. Um, Started teaching 1994. Fax machine. I don't if you're relatively young, you're probably wondering what that is. You probably heard the term, but never saw one. Uh, had phone line services. The very first online chat room. There was no voice. We just had to type. It was really, the old days of the internet and the internet just the beginning. Had offices, did lots of seminars around the country, different countries in most of the US. Master Trader used to be a brokerage firm. It was one of the first, if not the first, online brokerage firms in the industry for retail traders. And I sold that. I sold my old recordings that I created in the 90s to another company. Used to do trading challenges. So I've been around for a long time, educated quite a number of people, um, people that I thought were gods in the industry. You know, when you don't come from an industry and you meet people that you know that it to be hedge fund managers and market makers and specialists, um, there's somebody special. Now, they're special because of what they did, but they weren't so special based on the knowledge that they had. But I thought they had some secret sauce. You know, a lot of us do think that there's some secrets to the markets, and it's foundational information that I'm going to share with you. But anyway, these people trade off of order flow still to this day. That's what they do. You know, kind of coached as inside information, if you will. But those kind of things, and even like level two, I think they're kind of things of the past. People still use them, but everything's a derivative of price. Um, and I traded a lot of prop traders and retail traders and investors. And you can go to my website and you can see some very popular names there that were students. Some of them actually worked for me over the years, and it's a testament to what they've learned and what they continue to use today. So that's me in the middle. That's the first Day Traders Expo that ever was in 1999. And back at those times, you had all these brokerage firms that dominate the industry today that were telling everyone, don't go to that Trader Expo, you'll lose all your money. And today, that's all they want to do is advertise to get you to come and trade more actively on their platforms. So at the time, and still to this day, teaching other traders and trading technology, T3s as we called it back at the time. You can see behind the booth there the banners of training, trading, and technology. It says it was over 25 years ago. The Master Trader logo was that of the brokerage firm at the time, and my prior company was the Pristine Day Trader. And that was the first logo in the upper right, and then it changed to what you see in the middle there, and down at the bottom is Master Trader today. What is the method? And we have to have a method in what we do, how we make our decisions. I like to call it, we're going to build a belief system, because what we put on our charts create beliefs about what happened in the past, what's happening right now, and that makes us believe something's going to go up or down or sideways. Sideways lends itself to credit spreads. That's a way of making money when prices aren't moving. But I say price is king. Everything else is secondary. Can't take the prices off the chart if you're a technical trader. And you got to see the price action, and you choose to look at it in a certain format. Candlesticks. Believe it or not, when I started, there weren't candlesticks. You couldn't get them on a platform. Everything was bar charts, and candlesticks were, wow, that was like a big deal, But eventually, opening prices were available that we could download, and we can see things in a candlestick format. And there's no magic to them, really. It just creates a picture that visually communicates to us, I think, in a clearer way, in an easier way. But we can see the same things with individual bars. Now, I created this concept called bar by bar analysis. And you might go, what is bar by bar analysis? Well, it became something really powerful, and a lot of students are enamored by it because it is as powerful as it is. But what it evolved into wasn't how it started. And so how did it start? Well, as I learned about trends and support and resistance and stuff, and was able to define this is a buy setup, this is a sell setup, so on, basic stuff. Once I was in the trade, it was like, how do I manage this? How do I deal with my emotions that are telling me to sell, hold, do this, do that? And evolved bar by bar analysis that I'm going to explain to you. So trend analysis, and we're going to talk about multiple time frame analysis. These are big deals, meaning no matter how you look at your chart, you got to boil it down to some basic stuff. Now, is it going up, down, or sideways? Is one time frame going up? Is another time frame going down? Is another time frame going sideways? And that can become confusing. Support and resistance, that happens in multiple time frames. So these concepts are what comprise what I call thought building lessons, which is a course. And looking at all these concepts individually, understanding them in depth, and then putting them all together into that thought process. Broader markets influence what's happening in individual stocks. Some are on their own page. Market internals and intermarket analysis. That's a big part of understanding what's happening in the markets too, even intraday. And this is a big one, position and money management. Without this isn't, you're not going to make it. Meaning, because you'll just blow up your account, you'll get lucky one day and, you'll have a disaster the next day. More so, you'll have disasters. And all of that is trade to your trading psychology. And depending on the position size you're in, you can get stressed, or you can be very calm in what's happening and saying, you know what, I'm just going to let this thing play out based on my analysis, which I'm going to explain to you. So none of these is a strategy in of itself. We have to put them together to create those strategies. Now, as I delved into technical analysis all those years ago, and it's still the same way today as to, hey, this technical analysis suggests that such and such is going to happen. Well, as you start trading and you start feeling your own emotions and fear and greed and elation, things are going well, and you start associating that to price patterns, it's really an aha moment. And say these price patterns are really beliefs. What do you and I and other people believe created, however we're going to get there, creates expectations, and we place trades, and that's what creates price patterns. So as I'm looking at a chart, it communicates to me what others are doing, and as I place trades, it communicates to others depending on how they're looking at their charts as to what's going on. But as it says, these communicate to us how others have acted. What are their expectations in the moment? This makes it a heck of a lot more powerful when you're looking at a chart, especially when you cover some of the things that I'm going to show you. So, and it's on an ongoing basis, provides us those expectations. That's the essence of bar by bar analysis. Once we're in a trade, as you know, things can change dramatically, or they can keep going in the direction that we thought it would. And that tells us to hold, change, switch. And it speaks to us through what I call candle language on an ongoing basis. Continuous thoughts and trading decisions as to what's happening there. So the goal here is to understand this in multiple time frames and put it together into a format that we create a trading plan. What we're looking for, right, the essence of what we're looking for is, when is there alignment of the pictures? And so you think about pictures. Maybe you have a stack of indicators or Fibonacci's or who knows what on your charts or how you're looking at it. But we look at pictures. When we boil down what we do as technical traders, we look at pictures on a screen. And those pictures communicate to us up, down, or sideways. How are we going to make money from those pictures? So the pictures, the time frames that we're looking at have to be aligned with what you're doing. Investing, swing trading, day trading. And this point here is a big one. If you want to hold on XYZ, whatever it is, for weeks or months, you're swing trading or investing, what are you going to look at a 5-minute chart for? Now, we've all done that. And we've all, if you've been doing this long enough, you would admit that we have all given up a position based on some 5-minute reversal or 15-minute reversal on a swing trade that eventually went in the direction that we thought it would. It was like, why did I do that? Because you're in front of the screen, or you looked at your phone, you looked at an intraday chart or some website, or you attended a webinar and someone talked about 1-minute charts, whatever it might be. Right? You can choose all kinds of different time frames and types of charts. So we have to narrow things down to what we're going to do, and that's where consistency comes from. We narrow things down to a trading plan that we are confident in and comfortable in. So if we're going to be day trading, why am I going to look at a monthly chart? It's really of no use to me whatsoever. So again, putting these things in perspective. So here we have it. Let's start narrowing things down. We're going to have a macro bias. And what's our focus? Is it going up? Is it going down? Or is it going sideways? Where's support and where's resistance? This is basic stuff. And I'm not telling you something you probably haven't heard before, but I'm sure, because we've all done that, delved into more esoteric things trying to figure out it can't be that simple. Well, it is that simple. We make it more complicated. So we have to create a bias. And then from there, we can pick a time frame. I can trade from my macro bias if I want to. Again, the stops will be bigger. The targets can be bigger. My money management is going to be dictated by those higher time frames. But once I've got that bigger bias, and that's what this light blue line is pointing to, is that, hey, this macro time frame is pointing up. So I'm only looking for buy setups on this micro time frame. I'm looking for pictures that align with our bias. So as a swing trader, I'm going to use the weekly for my big picture bias, and I'm going to look at the daily for my entry points. For day trading, I can look at the daily, but then I look at the 65-minute, and that's a choice. A lot of people, I used to use it the 60, and 65 just breaks it up into equal increments rather than having one bar, depending on the platform you use, might be a half hour, or another platform, the last bar will be a half hour. So 65 breaks it up into equal bars. It won't make a difference as far as, really your trading decisions, because, that's your big picture bias. Is it going up, down, or sideways? And then we're going to trade from the 15 or the 5. Momentum moves, we can use it too, especially first thing in the morning. And we do that, as I said, during momentum moves. And even in the morning, well, things are really moving fast, but we can still stake with the 5-minute, and it's a choice. Let's simplify candlesticks. And you see where I'm going here. I'm breaking things down piece by piece, and then we're going to put it together. You don't have to learn a bunch of candlestick names. Ichikumi, not Ichikumi, that's another latest greatest indicator. Like Haram eyes and dark cloud covers and piercing patterns and morning stars and all of that. That's noise. What we're going to focus on, are they big candles or are they little candles? Big range bars or small range bars? What's big and what's small? You look at the chart, it jumps out at you. That's a big one. Big wide range green candle. We have to start putting that in the context of a trend. Or are they narrow? Or are they big red bars. And of course, these can happen in an endless combination of ways. So we have to start putting these messages together so that they're meaningful to us, that candle language. Now, at times, big green bars turn into what we call topping tail bars. In other words, there was a big retracement where it was up, and for whatever reason, whether it was intraday or intra-bar, intra-week, it was up and it went all the way back down again. So that leads to one of our rules in our plan. Don't place a trade until the bar is complete or really close to complete. And it's on a daily bar. If it looks like this in the last 30 minutes of the day, it'll probably look like that at the close if you're going to make a decision. Or if it's a topping tail bar or a bottoming tail bar, big red bar, and it went all the way back up again. Yes. So buyers took control. So we're reading what's happening. Narrow bars, just slowing momentum. So as we read this, did that momentum increase? Did it slow down? Did it reverse? Keep it simple. You want to give special names to it? Go ahead. What we're interested in is putting these messages together. Keep it simple, stupid. As I say, the KISS method. Now look at these candles and think about, what are they communicating? If you start applying this concept of bar by bar analysis, these were little bars, they were narrow bars. And the way I arrange these, you can see this gap down and it reversed back up again. That's a powerful message. This one here, down bar, down bar, down bar. Oh, the range contracted. Oh, that one is a bottoming tail bar. It went down. It was a wide range red bar and it turned into a green bottoming tail bar. Buyers took control. A narrow bar. Momentum is slowing. I've got 3 bars in a row where momentum slowed and one was a move down and came back up again. Buyers are becoming more aggressive. This one here was more violent. Let's assume they're wide bars. Big down, red, big green up. That's a powerful message. Lower left, big green up, little red bar, a bottoming tail bar that took out the low. Buyers took control. Again, these are starting points. Let's call this a sell setup for conversation. And it gaps up and it flips up again. Imagine this is a daily chart and you were looking at this and you thought, oh, that is going to go down tomorrow. And it does this by the end of the day. There's a message there. Here's another message. Big up bar, narrow bar, continuation up. We call this a 1, 2, 3. We trade that probably almost every day. So what do they all suggest? I told you, buyers are taking control. Now, let's get a little deeper into it. What if we start grouping these candles together, which your charting software is going to do it for you? We get more powerful message and confirmation of our bias. So big red bar, a retest, and a topping tail bar, and another one. The combination of grouping of those candles become a very powerful message that sellers are taking control. And it happens in the other direction as well. So multiple candles show us buyers, sellers are in control at the same level. This is a level. We're going to define these levels. Once we define a level, and just a visual thing, I don't need any indicators to do this. It's a visual. I define an area. My assumption is those buyers are going to show up again. It's an assumption. That's a belief. I need confirmation of that. So there was a minor confirmation of that. And then they did it again. And you see how we're becoming more confident in what's happening? We have to put together more information here. And then on the top side, sellers, sellers, sellers. The more information we have, the greater our confidence level, because we have that information that's confirming a certain area. So at some point, we're going to decide to place a trade based on that information, which is what we're getting at. So as I said, the pictures are communicating to us what our buyers and sellers are doing. And it's happening on a consistent basis. Let's look at another example. You should be starting to get this by now. And what you're looking at on this particular slide, you got one big red candle and one big green candle. And what you're looking at in here is if we were to have broken down these candles. So imagine this is a big red candle. That's a big one, green candle. And it went, like I showed you that other slide, it went down and it went up. Now, if we break this down into multiple time frames, we can get these different pictures. So let's imagine this is a daily chart, and you can pick whatever time frame you want. Let's expand it a little bit more and say that's a 65-minute chart. We expand it a little bit more. This could be your 15 or your 5. We expand it a little bit more. This could be a 2-minute. I'm just mentioning different time frames. As we would look at real charts, we would see this picture in different ways. We're just compressing or expanding data. As I mentioned, if we're swing traders, I don't need to expand the data down to a small time frame to look at this information. Eventually, these time frames will come to an alignment with each other. The essence of multiple time frames is when multiple traders or investors, their beliefs come into alignment with each other, meaning those that are trading the daily chart and those that are trading the 65-minute chart and those that are trading the 5-minute chart are looking at similar pictures that have created similar beliefs, and prices start to move with momentum. When there's a lot of overlapping bars, that communicates confusion. No one's truly in control. But when that things come into control and things move together. So what we're looking at here is the transition, the essence of the transition from red to green in other time frames. If I'm trading the daily chart and I see a big red and a big green, and that's in the context of a trend, uptrend near support, that just tells me to buy. What's going on here will eventually come into alignment with all of this. Because on this time frame, it would be like a big multiple bar, green bars going up. And if you're an intraday trader looking at a small time frame, you're going to say, that's extended. I'm not going to buy it there, which would be valid. And you'll wait for a pullback. And then this picture lines up with these pictures and everybody helps each other move it along in one direction. So pivots, what are pivots? There's your definition. A bar with 3 adjacent bars to the left and right. This is how support and resistance is created. Prices are coming down. See downtrend and 3 bars to the right. I see a pivot there. What do I do with that? I say, well, Greg, I wanted to trade this when it went up like that. Okay, fine. But we needed other information over here to determine whether I was going to do that. That's not the focus of what I'm talking about right now. It's just basics. Looking to the left. See the eyeballs? Look to the left. How is it acting? And it comes up to the red dot here, right? The pivot. How does it act? It was a big green bar up, all the way back down again. Sellers took control. Now, what am I going to do with this? Am I going to short it? Maybe. Not information here. Might I do a call spread? I do a call spread and bet that it's not going to go up above this high till expiration. Again, we'd have to look at time to expiration, another conversation. But that's the kind of information. This is the kind of information I would utilize for making a trading decision. What's going to be my vehicle? Credit spreads, debit spreads? Am I just going to short the stock or buy the stock? I have to make that decision. The takeaway here is there are sellers at that pivot. There's going to be buyers at this pivot down here. What is the reaction to those pivots? Is it a wide range bar? That's bullish. It suggests it's going to go up. You might do a put spread down here. You may utilize this information as a day trader, if this was a daily chart or a 60-minute chart, and trade this long. And we have to look at those other time frames. Now, what is it doing here? That's why I put the question mark, because I want you to continue to think. When prices move up, How did they move up? Meaning with speed, bar by bar, up, up, up. Now, when it gets to what's to the left, that's where resistance is. That's where sellers are, right? Buyers demand, sellers supply. There are sellers there. That's a fact. How does it react? Well, when it came down here, it reacted violently and went up. Now, I see a topping tail bar. Oh, it's going to pull back. It doesn't pull back. It's creating bullish price action. Now, if we could take, how about this bar? This bar right here, that bottoming tail bar, or this big green bar. If we could drag this over here and it gap down and close near the high, wouldn't that communicate to you that demand is really strong and you should be thinking to go long? So we're creating a belief system based on pivots, bar by bar analysis. So review. You should start thinking this way. What is technical analysis? Pictures of others' beliefs and expectations created with money. Determine your bias on the trend, support, and resistance, macro and micro timeframes. Look to the left for past locations of turning points. They're areas. Don't be thinking exact points like Fibonacci levels and it's going to come to some decimal, like 0.382, whatever it might be. This is a big trap. Technical analysis, the way it's taught by many, Elliott wave, Gann, Fibonacci, connecting trend lines, it's also subjective. And if you can just look to the left on your chart, was there demand there before or supply there before? There'll be again. Put it in the context of the trend of your macro time frame created in the micro time frame. Bar by bar analysis is going to tell you how others have acted and determine whether you should act or not. So let's look at a few examples. So based on what I just said to you, if you looked at this chart, what do you think you should be thinking and what is your bias? I don't think you're going to type much. But you know where we're going here. Prices moved up quite a distance. And if you're an oscillator person, you might say, oh, my stochastics 533 or 2153 is overbought. I better sell. Well, as prices accelerate higher, they tend to pull back or go sideways. Now, as it begins to pull back, I want to see the price action. So there's overlapping bars here. There's some consolidation. And notice, see the dots here? The green dot, the red dot. There's no dots. That means it didn't pull back. That means the demand is strong. So now as it begins to pull back, I'm not interested. These are pretty big red candles. Well, there's a big green one. That's good. It happened in an area of support. And here is an inside one. I'm getting interested. Now, this is something that I could buy. I don't like the way it came down. One of the things that we review in this belief system thought process is attributes of how prices pull back and the size of the bars. So that came down a bit violent. And so that damaged things a bit. But look at this bar. It took out those lows and came back. I'm super confident when I see something like that. You can do a credit spread or just go long or buy a call if it's liquid. Options have to be liquid. You got to look at the spreads, time to expiration and all of that. But this tells me that buyers are stepping in again, taking control with that bottoming tail bar that took out those lows, and it should go up. And this is what happened. Of course, I'm showing you something after the fact, but if you were a subscriber to our advisory letter, if you were in the green room with us, the live trading room, and we saw this pattern, we're going to say buy it above the high. If it's a 5-minute chart and the 65 minutes in an uptrend, I'm going to say buy it above the high. Look for it to go higher. Another example, what happened in the past? Similarly, and it was going sideways, 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 nothing, and it explodes higher. This happens a lot in this market lately. It's like the herd just jumps in all at the same time. All right. So more than likely, I would tell you I missed this trade. And it'd have to be on my radar why I'd be looking at this. But sometimes I see things that just explode like that, and I'm not going to chase it. And then it comes all the way back down. I look to the left, and it's in an area of support. That little E, by the way, if you're wondering what it is, that means it reported earnings on that day. So now, 3 bars to the right, it forms a pivot. That created support. Now, I believe that if it goes down there again, buyers are going to be down there. And I look for confirmation. That's my bias. That buyers are going to step up there, and I'm looking to go long. I know resistance is right there, but if it takes that out, I want to be a buyer. I believe it's going to go up. A retest like this, again, credit spreads. We have a lot of subscribers that do credit spreads, and our focus there with weekly option traders, credit spreads is, can I find patterns? That's what we look for. We look for patterns like this that are supportive, that prices won't go back down. Now, this is only a $10 stock, probably wouldn't have premium, but the patterns are universal no matter what we look at. It's all the same thing. So put spread candidate, say this was a $50 or $100 stock, it was liquid and there was premium, we're definitely going to be doing a put spread, credit spread for something like that. And otherwise, just think long, it's going to go up. All right. So a little review again. As I said, pictures, others' beliefs, expectations created with money. If you apply bar by bar analysis, you're looking to the left, you're looking for those pivots. We've defined what they are. And I think pretty much every software package has this. Some call them fractals, they call them swings, they call them pivots. All you need to go is find out whatever your software is and just set it to 3, and it'll put dots, some put triangles, some whatever they put on there, and just start applying what I've discussed with you. Let's look at another example. So wide range bar up. This was on earnings. This is, I showed you this picture. We looked at some of the candles, 1, 2, 3. Here's another one, 1, 2, 3. Now I could put a couple of moving averages on here. We could be talking about trends and so on, but the price action is communicating to us that buyers took control. And after it went up, it went sideways. They're confident. So it accelerates higher. There's no pivots. One of the things, like we talk about a lot of things in the green room, but in pre-market analysis, people come in hear what we say every morning. But one of the things that I've said even today, that prices are up, gold is going through the roof. The market, the Qs have been up, 4 or 5 days in a row. You might think it's got to pull back. And today gapped up, it pulled back a bit. But one of the things to look for in your analysis, does it close below a prior day's low? So you might think, oh, it's got to pull back. There's a red bar. Well, don't act on that. Did it close under a prior day's low and in an uptrend? So on the right side here, you see it came down. We start applying the same thing. Green up bar, inside bar, gap down reversal, bottoming tail bar, buy it. Bar by bar analysis is super powerful information. So if you can tell if something's going up, down, or sideways and apply this, you can start putting together a trading plan. Wash, repeat. That's what we do, wash, repeat. And look, it's coming down. It's collapsing. Look at the earnings. It collapses. Oh, that's got to keep going down. Maybe. Pivot. There's going to be buyers down here. I'm not buying it. That came down too violently. But that could have been a climactic kind of capitulation. I need more information. Look at this 3-bar reversal here. That's probably some candlestick pattern. What do you do with this? What would we do with it? Because it came down so hard, we do a put spread. Now over here is where we start thinking directionally. Strong move up, pull back, red bar, green bar, bottoming tail bar, buy above the highs. Correction bar. What's a correction bar? Well, it breaks below some lows and pips right back up again. Could be 2 bars, could be 1 bar. Correction bar. Pull back into support. Higher high, higher lows. It's in an uptrend. Looks to me like it's going to keep going up. I said, wash, repeat, wash, repeat. It's a thought process. As I said, we're there every morning at 9 o'clock. You can go on YouTube, you can go to Facebook, you can go on Twitter or X. On YouTube, it's cmastertrader.com. Every morning, 9 o'clock, we're there. Pre-market, we review SPX credit spread trades, open positions, things that are gapping, market internals at times. Every other Wednesday, like next Wednesday, we'll be doing an MT Live. So we do those every other Wednesday. So you can check that out. Free, free there. No charge to come in here, ask questions, and so on. A little extra review here, and you're going to get a recording of this, so don't worry about absorbing what I'm saying here. I know it's going fast. Define the trend, structure, pivots, higher highs, higher lows, sideways. Trend quality, are they overlapping bars? Are they gaps? Is it a big mess? Again, I didn't cover this, but what kind of bottoms? W's, M tops, are they V's? Are they climactic? There was a lot of climactic setups last week that we took advantage of. But this is what we've been talking about here today. Higher time frame, get a bias. And these arrows here mark the 2 time frames. These were actually intraday time frames. I remember capturing this, but look at the gap reversal. Strong move up, pullback, gap reversal. And that black bar, I've got this, like I have scanning software that I share with everybody that becomes a member, and mark your chart like that, and you can scan for wide range bars. Big bar, right back up again, long bias, follow the pivots. And it's simple, but I'm not saying it's easy. You just got to get your head wrapped around it. It takes time, just like anything else. Go check out Master Trader. Why Master Trader? You can just type that in, mastertrader.com, why Master Trader. You can scan that. It'll be in the recording, but you can go and read about Master Trader. Again, been doing this since 1994 with lots of individuals. And if you are so interested, this package I put together, if you know nothing about technical analysis, this Kickstart and this MTOP courses will get you started in a fast, great way. You'll understand how the markets are constructed. And from there, swing trading seminar, gap trading seminar, and the most important one that has the least interest, believe it or not, position and money management. This package, I'm telling you, you don't need more. It tells everything. You might think that's a lot of money. Well, education costs, and you will lose that much. And how many times I've heard, if I wish I took the course ahead of time. So you can go to mastertrader.com, Tiger, and access this. And it comes with monthly coaching. We do coaching once a month. And the scans, if you use TC2000, which I have no affiliation with, but I create a lot of layouts and scans from that to find these setups, share with you at no additional cost. I think my time is up.